Whoa, whoa, whoa. What's going on? How's everybody hanging in there? Straz, are you alive out there, buddy?
I'm doing fine. I'm not gonna sit here and pretend to be happy about the price action. I'm obviously losing money. I have a lot of long exposure. It confuses me that there's this like rush on the internet, in times like these for like it's like a competition for like who can be the most zen, or like look at me, I'm so cool, calm, and level-headed. I must have this all figured out. It's like, tell me you don't have skin in the game without telling me that you don't have skin in the game. I don't know what this is all about. It's kind of a new thing. Do we see like what do you think about that?
Yeah, usually when the market's getting crazy like it is right now, the internet is filled with hot takes of people panicking and freaking out and calling for doom and gloom. And you were talking this morning about how it feels like everyone's just trying to one up each other with how zen they are about the market right now.
I, on days like today, so we've talked about it. The past 3 weeks, I've been weirded out, right? It's just strange. I keep finding myself saying change in character, taking profits in tech stocks, a lot of things, a lot of the leaders hit the 161.8% fib, right? In a lot of cases, I'm taking half off, but not everything. Now, at this point, with the way the market is cracked, to me, we're going to get a epic, you know, um, oversold bounce here.
Oh
I would
yeah.
imagine days to weeks, and I will be selling more into it. And that's it. And the why? So why will I be doing that? I don't know if we've seen the highs for this cycle or if this is the top or not. I don't know. No one knows. Anybody who tells you that they know is a liar. What I do know is that I have the right as an investor to sell when I want and then buy things back when I want. I can look back in a couple of weeks, say, oh, I was wrong. Look at, they really repaired this damage. Things look fine again. I could buy everything back, maybe miss a couple percentage, in coming in and out, and that's fine for me. I don't see any reason to continue to have massive risk asset exposure in an environment like this. I just don't. I want less and less. I want more cash in times like these, and that's just, I'm not going to come up here and tell you anything outside of that. I want so much exposure during bull markets, and then I always give some back at the end. It's just a part of the process. I want to
Right.
give back as little of my money as I can right now. I wrote in my diary this morning, Sean. The title of my diary post was activate keep money mode. You have get money mode and then keep money mode.
I like
I've
it.
been in get money mode. Now I want to be in keep money mode. That's it.
Well, you know what? We should have said this at the top. Welcome to the Flow Show. This is the Flow Show, and he's Steve Straz, and I'm Sean McLaughlin. We're a little off script today. Not that we're ever on a script, but those of you who are regular watchers of the Flow Show, you know that in this show we kind of show you how the sausage is made. We run through some charts and some setups that we like, and we look to see if there's an options trade to be made during the show. But today's show feels a little different. Me and Straza both are of the mind that we want to kind of put our hands in our pockets right now. We're playing defense, as Straza said, keep money mode. So we're not going to come up with a specific trade idea here for you today. That's not the goal, but maybe we'll talk about some high level concepts. I've got a couple ideas, generally speaking, that I'm happy to talk about. But yeah, this is a tricky market, and we know a lot of people are having a hard time. I've got a lot of long exposure like you do. That's I got stopped out of about 6 positions this morning. I'll probably get stopped out of a couple more if we don't close on the highs today. Individual stocks. I'm not talking about like the index. I doubt the index is going to close on highs today, or we'll see. Um, but look, JC and I talked on the phone this morning after the morning show. He came to me. He wanted to sell iron condors. He's been talking about selling iron condors. And I said, look, iron condors can be good trades, but right now, most of the instruments that we're looking at to sell iron condors, and they're breaking out of ranges. And you don't want to be selling any kind of delta neutral trade in anything that's breaking a range.
Right.
So I told him, I said, you got to be very careful, be very selective in your names. Don't be, because just one example, he brought XLI to me. And
Yep.
that chart, if you look at it right now, it's breaking 4 month support right now. So if that thing closes at its high today, then maybe that's a good candidate for an iron condor. But until that happens, that thing's expanding its range right now. And we're seeing that all over the place, right? I'm not picking on XLI. We're seeing that in every big cap stock, so
100%.
many names. So I told JC, I said, look, what I want to see for me to step in, and yes, this is a premium selling market. Well, sorry, let me dial that back. It can be a premium selling market as an option trader, but you don't want to be picking bottoms. You want to see the bottom come in. You don't want to buy, you don't want to be a hero and try to get in at the bottom. You want to see it. JC, I told JC, I said, we want to see the wicks, right? We want the wicks to define our stop loss level. And right now, there's very few wicks out there. And what I mean by wick is we want to see a stock or an index trade really far down intraday and then bounce all the way back and close up near the highs. That's what we want to see. We haven't seen much of that yet. I mean, there's a lot of time left in this day, but so with that backdrop, Straza,
Yeah.
I'm waiting to see things close at the highs. I don't need to catch the bottom. If the bottom is in, maybe not the bottom, but there's going to be a bounce, like you said. There's going to be an epic bounce at some point. Will that mean the correction is over? No, not necessarily, but there will be a bounce and there'll be plenty of upside available for those willing to be patient and wait for a better entry.
So I think this is perfect, right? This is where we should start. What are we looking for before we put trades on? It's easy to come here and say, we're sitting on our hands today. That's the right thing to do. When does that change? At this point, sellers have been in control of the tape day in and day out. Rips keep getting sold. Dips are not really getting bought. I need more than just like an intraday wick, right? I need to see a candle close green, for crying out loud. I'm already getting the messages, hey, look, AMD's green on the day. Where's the relative strength today? I'm going to run my scans that are going to identify the relative strength and tell me at the close. But on a day like today, I don't even want to be in front of my screens. I don't even want to see it. I don't need to see it. I might do something stupid, put on a trade when I probably shouldn't. I need to see sellers stop dominating the tape before I want to put anything on. Sean, some of the best information I got over the past few weeks, I've been selling puts against support, selling puts against support, selling puts against support all year, saying this isn't going to be a top. I got blown out of my puts like 2 weeks ago, selling puts in Dell, AMD. Those were tops. That was information. The first time this year that strategy didn't work. And when that strategy doesn't work, it hurts. I mean, you lose money. Okay.
It certainly does. Okay. So you're talking about selling naked puts. Definitely a risky strategy, especially in a tape like this. Very risky. I feel like we need to talk about this because it's topical. I see a lot of people complaining about it. There's a lot of people having a hard time logging into their brokerages, having a hard time getting fills because there's a lot of slowness everywhere. Thankfully, knock on wood, I have not experienced that. I have 2 brokerages that I trade through and I've had no trouble so far. That could happen. But I think it's important to talk about in times like this as options traders. This is specific to options trading. The Flow Show is about options trading. This is why, generally speaking, 80%, if not more, of the trades that I put on have defined risk. I mean, this is not the reason why, but this is one of the nice things about having defined risk trades on is that some of the risks we don't think about are not being able to exit our positions because our broker is down, right?
Yeah.
And if you have a defined risk trade on, yeah, it sucks when you want to get out and you can't get out, but at least
Yes.
you've accepted that risk on day one when you put that trade on, whether it's a brokerage error or something else. And so, that can be a worst case scenario. And so we always have to plan for the worst case scenario. And sure, I sell naked options from time to time. Straza clearly does from time to time, but easily 80% of my options trades are defined risk. And this is one of those reasons why, because you never know what can happen and you have to prepare for the worst. That's it.
I think that's great wisdom. And this stuff happens too much. Well, give me a second. Another thing you have to do to hedge this sort of a thing, because this happens, Sean. When there's volatility, it's always which broker's down. It's always somebody's down. Robinhood got sued, whatever, had the whole big thing during the pandemic boom. You need to have more than one. You have to have more than one loaded up, right, and ready to go. In other words, don't just open an account and not fund it and then wait for the day that you need it to fund it. You should have dry powder in multiple accounts. Say that you were long something in Schwab today that you don't want to be long. You go hedge it out somewhere else. Like that is, I think, risk management 101. Have 2 accounts. I am not happy today. I think what's going on with Schwab is absolutely unacceptable in 2024. I don't think it's okay. People are pissed and they should be. However, I don't really care that much because I don't want to buy anything and I don't want to sell anything. I do want to know that my broker allows me to in volatile times like this. And with Schwab, this has happened now several times this year. It's not acceptable and I'm done. I don't think you should accept this. If you're an investor and this is what your broker's doing, I think you go find another broker, period.
Yeah, no, I agree. It's not a good situation. Just another reason why it's better to sell defined or to get into defined risk trades. There's a time and
Well,
place for naked options, and we do it, of course.
yeah.
But this is a reminder of why things are risky.
So I'm going to kick it to you. Say theoretical. I'm going to scenario here. Okay. We get some green shoots today. We get the big wicks that we're looking for. At this point, a lot of these candles aren't even going to have wicks because of the way that they open. But it looks like we will maybe close on the high with some big Marabozos, whatever. Okay, we get some green candles today. We come in tomorrow, and they're not selling them again, right? We come in tomorrow; it's a normal, orderly open. We got some green candles. What are the strategies, the options strategies that come to mind first for this kind of an environment? Like, what are you going to be thinking in terms of what kind of trade to put on?
I
Saying
think my thought here is I want to be selling defined risk put spreads. So that means selling a slightly out of the money put and protecting the downside with a long put because we don't want to get blown out, right? And because I think buying calls here, and obviously we have to look at everything on a case by case basis, but generally speaking, without looking, buying calls right here with VIX at what's VIX at right now? I mean, it's all over the place. VIX at it was at 50 at one point today.
Yeah.
I mean, buying calls here, it's going to be expensive. And it doesn't mean you can't make money,
Yeah.
but you're going to be frustrated when that $50 stock goes up $10 and you bought a at the money call and you only make $3 on it. You're like, wait, why? I should have killed it. Well, no, because the volatility got crushed as that stock went higher and you
Right.
paid a lot of premium for that call. So I think in this environment, with the right setups, again, and that's the big caveat as we discussed, with the right setup, I think selling put spreads here is a cautiously bullish trade, which is the only kind of bullish trade I want to put on right now, Straza. This is not a time to swing for the fence. This is a time where we can be tactical and sell some premium and bet on at least recent lows holding, right? That's all we're really betting on when we're selling a put spread. We don't need it to skyrocket. We just need it to stop going down. If it does that, we can make money.
And in the event that it doesn't hold, our risk is limited, not unlimited like selling naked puts. And that's the difference maker here.
And we have two outs, right? We have the defined risk. So we know what our worst case scenario is, and we have to size our position knowing that that's a real possibility. And if it happens, it's not going to take us out of the game. That's number one. And number two, if we're waiting for our entries, we talked about, we want to see some wicks. We want to see some clearly defined levels we can lean against. We have that level to lean against. That's our other out, right? So we have two reasons to get out of the trade, which is a good thing.
Yeah, I like that. So like longing calls into, something that's probably likely to be a sweet bounce can be, I guess, deceiving when volatility is so high, right? You're going to overpay for something. You probably get the move and you're going to look back and say, I should have gone 5X and maybe I should have just bought the common at this point.
Yeah. Maybe the caveat, and this is not something I do, Straza, or at least not something I do regularly, but if you do feel like you have a good feel for timing a bounce, right? If you feel like you got a good feel, there's a reason, the chart's giving you a reason that here's a time to buy. And if you don't like selling put spreads, if that's not your thing, maybe your broker doesn't allow you because you don't have the right permissions in your account. If you want to buy calls, maybe what you do is you buy the shortest dated calls that you can, maybe a week to expiration, right? Like a weekly, because look, you got to get the timing right, but at least you're not paying as much premium. And if the thing rips, you're going to get a much better chance of getting a good return on your money versus saying, like, I don't want to be going out and buying January calls right now, right? I just feel like I'm going to be swimming upstream the whole time. That's going to suck. I'm not going to get the return I want, even if I nail it.
So you're talking about literally buying weekly calls and being out in a day or two. Quick.
Exactly. You want to get that rip and you're out. That's it. Not something I do a whole lot of, Straza, but if you're dead set on using calls, to buy calls in an environment like this, go short dated. Yes, your timing will have to be spot on, but if you get the timing right, you'll be a lot happier versus, let's say you bought a January call and you're hoping to ride it for a big move. You might get that big move, but you're going to be swimming upstream against that theta decay.
What do you think that I'm personally missing? All these hot takes about how like this is a trader's paradise. I think risk rewards are skewed in an unfavorable manner because the downside risk is just way more than it was a couple weeks or a couple months ago. And premiums are high. You're going to be paying up to leverage your positions. And just in a tape like this, do you really want to step in at all? I don't understand all this, like, trader's paradise. For me, this is an environment where I do close to nothing in. It's not a paradise at all. It's boring as hell. In fact, if we didn't have a video at 4 o'clock today, I'd be golfing today because there's really nothing for me to do here. I'm worthless.
It has everything to do with your time frame. If you're a swing trader like you and I are, this is not a trader's paradise. This is a whipsaw city, right? This is not good. But if you're a trader like Kenny, who's a day trader, yes, this is a great market. I know people, day traders, who are killing it right now. I had my best 2 weeks of the year last 2 weeks doing a day trading strategy. I do my index options, something I just do on my own.
So
but yeah,
it's puts, right.
What's that?
You were long some Q's puts.
I rode the bound. I rode the market down. I mean, look, if I would have held those things, if I had the stones to hold my positions overnight, I mean, I would have tripled my account over the last 4 days. But that's not what I do in that account. So it's a bummer. But hey, nonetheless, it's a first class problem to complain about not making enough money. But as swing traders, if you're a swing trader, this is a very tough market. And a lot of the options trades that we do in All-Star Options, those are all swing trades, right? And this has been very challenging. Hilariously, I got out of a Tesla trade today. I actually made money on it. I can't believe we made money on that Tesla trade. Not as much money as we were up at one point, but got out for a profit because the volatility was so high. The premiums in those options were so juiced. We got out because we tripped a stop loss level on the chart. But the options premiums are so juiced that we got out for a profit, which doesn't happen very often, but that's one nice thing when volatility strikes.
And there's going to be a lot of people out here saying, oh, you're crazy to sell today. We're in capital preservation mode at this point. You're never crazy to sell, especially like you're saying, if you have gains in something, you want to give all those back? Absolutely not. You buy it back later. But there's no reason. What I'm saying is, don't change the rules. If you had stops in place and that was your plan and your stops are getting blown, those should still be your stops. Regardless of, what's going on in the broader market. Oh, we're due for a bounce. Great. Maybe we were due for a bounce last Thursday too, and Friday. And now we're due for a bounce against today. So you see how that kind of works? You could take a trade that you were up 100% on and in a number of days, give it all back. You don't want to do that. And it's also just bad for your psyche. It's bad mentally.
Right. Well, let's finish with this thought, Straza. With the VIX at the level it's at right now, let me pull it up my screen. Let's give a real-time price on the VIX. Not that that's the end-all be-all, but it's got a 33 handle on the VIX right now. Yep. In a market environment like this, you guys talked about it on the morning show this morning. It pays to trade smaller. If you're gonna step in and take on some risk in this market, and there's nothing wrong with that. Okay, there is opportunity for those who have a strategy and have a game plan. Okay, there is opportunity, but with VIX at 33, 34, you want to be trading smaller. You could trade a half size position and still make the kind of money you make on a normal trading day because the moves are going to be so much bigger. All right, now big moves is great if you're winning. Big moves is terrible if you're losing. That's why you want to keep your trading size in check. Nothing wrong with trading smaller. Nothing wrong with putting your hands in your pockets. Capital preservation mode is number one. Absolutely number one, number two, and number three, really. So no shame in doing nothing.
Tighten your stops, reduce your size, let the dust settle, right?
All right. Well, Straza, we didn't have any specific trade idea for people this week. Like I said, we don't think this is the market environment to be trying to be a hero right here. Look, in the days and weeks to come, Straza, we're going to hear folks on Twitter, all the heroes who bought the bottom or bought the bounce. We're going to hear all that. And that's great. But don't let that piss you off if you didn't participate, right? Those people took a lot of risk to get those trades. And maybe they're comfortable with the risk, or maybe they were irresponsible, but either way, they're playing a different game than you are. So I'm telling you now, 2 weeks from now, I don't know when the bounce is coming, but you said it, there's going to be an epic bounce here. We're going to see a 5% bounce in the S&P and the NASDAQ at some point. And there's going to be a lot of people crowing about catching the bottom. Tune them out. Don't listen to those people. Do you manage your risks? The whole point of this game is longevity, right? Like you gotta be able to come back when the environment is right. Our friend Joe Fahmy talks about this, right? Like when it's a bull market, you want to be aggressive. You want to get into it. But when it's in a bear market, you take cash off the table, you sit, you wait for your spots. You don't get involved until you have signals that tell you now's the time. And you're going to miss the bottom, but that's okay. There's plenty of upside left.
This is about surviving right now. Don't do things that will take you out. And that's part of the reason why we're here talking about selling puts naked and something like this. These are things that can take you out and blow your account up. Don't do that stuff right now. Just, let them dance. There'll be plenty of opportunities in the future, and we'll be here for them.
Yeah, in full disclosure, I got blown out in an Amazon short puts this week. I closed it this morning. Took a big loss. That sucks, right? Made me think, what the hell was I doing selling naked puts? But hindsight is 2020. All right, everybody. This has been the Flow Show. He's Steve Strazza. I'm Sean McLaughlin. Hang in there. We'll do it again next week. Hopefully, we'll have a better environment to put on some good trades next week.
All right. Stay safe, everybody.
Stay safe.